The market opened with tension and closed with a twist. On July 16th, the S&P 500 slipped 0.4%, the Dow fell by 1%, but the Nasdaq, it soared to a new record, over 20,677, thanks to tech giants like Nvidia and Apple. Inflation came in hotter than expected at 2.7%, dimming hopes for a near-term rate cut. Investors are now rethinking strategy, watching the Federal Reserve's next move.
2025 is the year of the comeback, and tech is leading the charge. Nvidia surged after news broke it's resuming AI chip sales to China. The Nasdaq? It closed at a record high for the fourth time this week. Wall Street fund managers are rotating into tech at the fastest pace since 2009. From AI breakthroughs to soaring demand, big tech isn't just thriving, it's powering the entire market forward.
A panoramic view of a futuristic financial district under stormy skies, symbolizing economic pressure. In the foreground, giant, translucent numbers float mid-air. 10-year, 4.91% up arrow, and 30-year, 5.05% up arrow. A golden 10-year treasury bond scroll rolls across a stone table, glowing faintly. In the sky above, fiery red inflation graphs slice through dark clouds, casting reflections on a glass plaza. Distant figures in suits examine oversized digital charts, looking concerned. Lightning subtly forks behind them, hinting at volatility. Mood is tense, dramatic, and symbolic of mounting pressure. Style, cinematic realism, rich contrast with deep grays, amber light accents, and sharp details. Overlay text on image. Header, WAIN, Bond Yields and Inflation Watch. Bullet points. 10-year yield climbs to 4.91%, 30-year yield tops 5.05%, June inflation hits 2.7% YOY, markets price out July rate cut, Fed pivot now seen later in 2025.
Investor mood is shifting, but not everyone's on the same page. According to Bank of America's latest survey, 81% of fund managers still expect rate cuts in 2025. Cash allocations have dropped to just 3.9%, the lowest in 4 years. There's a bold rotation into tech and U.S. stocks, but behind that optimism, a quiet uncertainty still lingers. Tariff tensions are heating up. The U.S. has proposed a 50% tariff on copper, and other goods from the EU, Canada, and Mexico may be next. With supply chains already stretched, new trade barriers could spark another wave of inflation. Investors are watching August 1st closely. What's at stake? Global pricing, earnings margins, and fragile diplomatic ties.
2025 is a tale of two outlooks. Bulls see the S&P surging to 7,000, driven by AI, tech, and innovation. But not everyone's convinced. Some strategists warn of a 12% correction ahead, citing inflation, tariffs, and fading consumer strength. The question isn't who's louder, it's who's right.
The smartest move right now? Balance. Diversify across AI-driven growth and real-world value. Hedge your bets with bonds, metals, and global assets. Keep some cash ready because the best buys often come during fear. In 2025, it's not just about chasing highs. It's about staying prepared, staying patient, and playing the long game.